Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Join us this Saturday as we have 4 action-packed webinars coming your way. The first one deals with how to set goals. Setting goals is the first step in the investment journey, and this is a very important process to get to your final destination. The second webinar of the day we have coming for you is based on how the US-based pharma companies are driving the stock market rally. Want to know more about valuations and how their product have been priced? Join us for this webinar. For the third webinar of the day, we have a very interesting take on the 60-40 investment portfolio. 60% equities, 40% bonds have been an investment portfolio since many years. You want to know how this portfolio can be structured? Join us for the webinar. For the last webinar of the day, we'll explore how to build a goal-based investment portfolio. Are you someone who have your goals set and want to know how to start your investment journey? Join us for this action-packed webinar.
In today's video, we're going to talk about preparing portfolios for success. All of us want to be successful investors, but what does it really take to succeed in financial markets? The first and most important thing is for an investor to be very aware of who they are. When we know ourselves, we can actually participate much better in financial markets. What do I actually mean by this? What I mean is that many of us don't know what our true risk appetites are. We think that we might be more conservative or more aggressive than we actually are. We only find out our true risk appetite when events occur in the market and we respond to them. So it's important to reflect on your actions as an investor, and it's important to be aware of putting yourself in hypothetical situations and seeing how you would respond to them. So that could mean things like thinking about what you would do if your portfolio lost 20% or 30%. Are you the kind of investor who would exit from that position, or are you the kind of investor who would want to stick around and participate much more? So this is one kind of psychological test that you can do in terms of understanding your own risk profile and risk appetite. The second thing is to know what your priorities are. So making sure that your investments are actually goal mapped and having a purpose for every investment is very important. This purpose is what drives us to participate in creating wealth and not just in looking at hot ideas and moving from one idea to another as the tides of the market also change. The second important thing is for an investor to cultivate discipline. When we talk about disciplined investing, most people just stop at the idea of being a regular investor, which means that you probably have a systematic investment plan or some kind of recurring investment strategy that ensures that every month or every quarter you're putting in some money into saving instruments. However, discipline is a much broader subject and can have deeper connections to your investment journey. So discipline also involves things like reviewing your portfolios and making sure that you're actually turning those notional gains into realized profits at appropriate times. This ensures that you actually end up creating wealth. If we just look at notional profits and we don't look at trimming risk or position sizes in portfolios, what tends to happen is that our allocation deviates from what we originally structured, and we may not be having the right level of risk and reward in our portfolio construct. It can also translate into having a financial plan and working in a disciplined manner to ensure that your overall financial wellness is taken care of and not just one or two elements of personal finance. The third element, and probably the biggest green flag in terms of success as an investor, is to have the confidence to participate continuously in markets. Many of us are very confident when we see results and performance, but we tend to lose that faith when the opposite happens. But markets are cyclical, which means you will have your ups and downs in your journey, and you just need to navigate each market condition with a different mindset and a different approach as well as process. The idea of having discipline ensures that you can follow more or less set process through every market condition, but it also prepares you to deal with the tougher times in the market. So having the confidence to build your portfolio regardless how the market is doing is very important and is actually going to lead you towards portfolio success. If you found any of these strategies helpful, tell us in the comments below.